In a groundbreaking announcement that could reshape the financial landscape of the United States, President Donald Trump revealed the establishment of a U.S. crypto strategic reserve, a move that has sent shockwaves through the cryptocurrency market. The reserve will include prominent digital assets such as Bitcoin, BTC, Ethereum, ETH, XRP, and Cardano ADA, marking a significant pivot in the government's historically cautious stance towards cryptocurrencies. This decision not only elevates the status of these digital currencies but also signals an acknowledgement of their increasing relevance in global finance. The creation of a national reserve for cryptocurrencies is an unprecedented step for the U.S. government, which has often expressed skepticism regarding the volatility and regulatory uncertainties associated with digital assets. However, Trump's announcement indicates a shift in perspective. As policymakers are beginning to recognize the potential of cryptocurrencies to contribute to economic stability and innovation. This critical industry has faced years of corrupt attacks, and we are now moving forward with a crypto strategic reserve, Trump stated, emphasizing the importance of integrating these assets into the financial framework. The implications of this move are profound. By incorporating major cryptocurrencies into a strategic reserve, the United States is positioning itself as a leader in financial innovation. Bitcoin, often referred to as digital gold, is viewed as a hedge against inflation and a store of value, while Ethereum has been instrumental in advancing decentralized finance DeFi through its smart contract capabilities. XRP is recognized for its efficiency in cross-border transactions, and Cardano's research-driven approach enhances its credibility within the blockchain ecosystem. The immediate market reaction was electric. Following the announcement, Bitcoin surged nearly 9%, surpassing the $93,000 mark, while Ethereum climbed 11% to $2,500. XRP witnessed a staggering 30% increase, reaching $2.80, and Cardano soared almost 60%, crossing the $1 threshold. These dramatic price movements reflect a renewed confidence in the cryptocurrency market, fueled by the prospect of government endorsement and potential regulatory clarity. For individual investors and businesses, the establishment of a crypto strategic reserve presents both opportunities and challenges. On one hand, the legitimacy conferred by government adoption could encourage broader acceptance and use of cryptocurrencies for everyday transactions. Businesses that embrace digital currencies may see increased consumer demand as people grow more confident in using crypto as a payment method. Conversely, this recognition may also lead to increased regulatory scrutiny, introducing new challenges in trading, taxation, and compliance that could impact the broader crypto economy. The broader implications for the U.S. economy are significant. By leading in the integration of digital assets, the United States is not only enhancing its position in global finance but also addressing the potential challenges to the U.S. dollar's dominance as the world's primary reserve currency. As more nations explore the adoption of digital currencies, the U.S. is taking a proactive approach that could help maintain its leadership role while adapting to the evolving economic landscape. Looking ahead, the full impact of the U.S. crypto strategic reserve will take time to materialize. Questions remain regarding the management of the reserve, the specific applications of these assets, and whether other cryptocurrencies may be included in the future. Moreover, the political climate and upcoming elections could influence the initiative's trajectory, but one thing remains clear: cryptocurrencies are no longer relegated to the fringes of finance. They are now integral to national economic policy, with far-reaching implications for investors, businesses, and the global financial system. As we stand on the brink of this new financial era, it is essential for stakeholders in the crypto space to remain informed and adaptable. The establishment of a U.S. crypto strategic reserve signals a pivotal moment in the evolution of finance, one where blockchain technology and decentralized finance play a crucial role in shaping the future of the economy. The world is witnessing the dawn of a new financial landscape, and the implications of this strategic reserve will undoubtedly resonate for years to come. Bitcoin's price has experienced a remarkable surge, with the cryptocurrency climbing over 20% in just 24 hours, driven largely by a significant announcement from former U.S. President Donald Trump. As Bitcoin breached the mid-$90,000s, investors are keenly examining the implications of this rally and the underlying factors that fueled it. In a recent post on social media, Trump disclosed plans for a U.S. crypto reserve which would encompass a range of prominent digital currencies including Bitcoin, Ethereum, XRP, Solana, and Cardano. "I will make sure the U.S. is the crypto capital of the world," he stated, emphasizing that Bitcoin and Ethereum would be integral to the reserve. This announcement has been interpreted as an endorsement from the highest levels of government, which significantly bolstered market confidence and contributed to the rapid price increase of Bitcoin. Following Trump's declaration, Bitcoin briefly traded between $93,000 and $95,000, marking its most substantial rise since November. The cryptocurrency market reacted positively, with Bitcoin's ascent triggering a broader rally across altcoins. Ethereum saw a 13% increase, rising to approximately $2,516, while XRP surged by an impressive 33% to reach $2.97. In total, over $300 billion was added to the crypto market's capitalization within hours of Trump's announcement, underscoring the profound impact of his statement on investor sentiment. Technical analysis suggests that Bitcoin's recent price action is not only a reaction to Trump's announcement but is also supported by favorable market conditions. After a dip below key support levels, the recovery was marked by a bullish reversal pattern indicating a strong interest from buyers. Analysts note that Bitcoin's price now sits in a consolidation range, with support at $90,000 to $92,000 and resistance at $108,000, suggesting that if it holds above these levels, new all-time highs could be on the horizon. Broader macroeconomic factors also play a critical role in Bitcoin's resurgence. Recent U.S. economic data has raised recession fears, which paradoxically could enhance Bitcoin's appeal as a hedge against inflation. The potential for central banks to ease interest rates has created a risk-on sentiment in the market, making cryptocurrencies more attractive to investors. As inflation dynamics evolve, Bitcoin is increasingly viewed as digital gold, a hard asset with a capped supply that can serve as a store of value during uncertain economic times. On-chain data further supports the narrative of a robust recovery, showcasing significant trading volume increases and notable whale accumulation. In the past 24 hours, Bitcoin trading volume surged by over 140%, while large holders have been actively purchasing during this rally. With approximately $500 million worth of Bitcoin flowing out of exchanges, the prevailing sentiment remains bullish, indicating that many investors are positioning themselves for future gains. While Trump's announcement certainly acted as a catalyst for this price surge, the current rally is underpinned by a complex interplay of technical, macroeconomic, and investor sentiment factors. As the cryptocurrency landscape continues to evolve, all eyes will be on the upcoming White House Crypto Summit scheduled for March 7, which may provide further insights into the administration's stance on digital assets and the future of the U.S. crypto reserve. In conclusion, Bitcoin's recent price surge highlights the fragile yet dynamic nature of the cryptocurrency market, where political endorsements and macroeconomic trends can swiftly shift investor sentiment. As Bitcoin navigates this volatile landscape, the potential for further gains remains, particularly if supportive economic conditions persist and regulatory frameworks become more favorable. Traders and investors alike will be closely monitoring these developments, as the next few weeks could prove pivotal for the future trajectory of Bitcoin and the broader cryptocurrency market. In a dramatic turn of events within the cryptocurrency market, Bitcoin and several other major cryptocurrencies surged by over 20% following remarks from former President Donald Trump regarding a proposed national cryptocurrency reserve. This announcement, made via social media, signals a potential shift in the U.S. government's approach to digital currencies, with the intention to position the nation as the crypto capital of the world. Trump's declaration included 5 cryptocurrencies: Bitcoin, BTC, Ethereum, ETH, XRP, Solana, SOL, and Cardano ADA. The immediate market reaction was significant, with Bitcoin and Ethereum jumping by more than 10% and XRP, Solana, and Cardano experiencing increases of up to 62%. This swift rally added approximately $300 billion to the global crypto market, showcasing the profound influence that political figures can exert on digital asset valuations. Historically, Trump's relationship with cryptocurrencies has been complex. During his presidency, he was known for his critical stance on Bitcoin, labeling it a scam. However, in recent weeks, he has pivoted to embrace the crypto community, even launching his own tokens alongside his wife Melania Trump. This shift comes as a stark contrast to the previous administration's regulatory focus on the crypto sector, which had emphasized concerns over fraud and money laundering. The announcement of a strategic cryptocurrency reserve raises numerous questions about its implementation and regulatory framework. Trump indicated that he has directed the presidential working group to move forward on this initiative, which may involve utilizing cryptocurrencies seized by law enforcement. However, it remains unclear whether such a reserve would require congressional approval or how it would function operationally. Market analysts have noted that this announcement could signal a broader acceptance of cryptocurrencies within the U.S. financial system. Trump's endorsement could legitimize these digital assets and attract institutional investment, remarked a leading cryptocurrency analyst. The upcoming crypto summit at the White House, scheduled for Friday, is expected to provide further clarity on the administration's plans. As the cryptocurrency landscape evolves, the implications of Trump's statements could reverberate beyond immediate market gains. Investors and stakeholders will be closely monitoring regulatory developments and potential legislative actions that could shape the future of digital currencies in the United States. The attention on crypto is likely to intensify, particularly as discussions around a national strategic reserve unfold. In conclusion, while Trump's recent embrace of cryptocurrency has sparked enthusiasm among investors, the long-term effects of this policy direction remain uncertain. As the industry awaits further details from the upcoming summit, the crypto community is left to ponder the implications of a potential national reserve and the changing political tides surrounding digital currencies. With the market's volatility and the shifting regulatory landscape, the coming weeks will be crucial in determining the trajectory of cryptocurrencies in the U.S. In a significant move that could reshape the landscape of cryptocurrency investment, former President Donald Trump unveiled the Strategic Crypto Reserve, a portfolio that includes major cryptocurrencies like Bitcoin, BTC, Ethereum, ETH, XRP, Solana, SOL, and Cardano ADA. During the announcement, which has garnered considerable attention, Trump expressed his enthusiasm for both Bitcoin and Ethereum, stating, "I love Bitcoin and Ethereum." This endorsement marks a watershed moment in the intersection of politics and cryptocurrency, highlighting the growing acceptance of digital assets in mainstream financial discussions. Bitcoin has long been revered as digital gold, a term that underscores its role as a scarce and predictable store of value. However, recent developments suggest that Ethereum is gaining traction in a critical area: supply expansion. Since the Ethereum network transitioned to a proof-of-stake POS model in September 2022, its supply growth has been more conservative compared to Bitcoin, challenging the notion that Bitcoin is the superior form of sound money. Bitcoin's supply is capped at 21 million coins, a hallmark that has reinforced its reputation as a strong store of value, especially following its recent halving in April 2024, which slashed its annual supply growth to 0.83%. This predictable scarcity has positioned Bitcoin favorably against fiat currencies, which can be printed in unlimited quantities. In contrast, Ethereum's adaptable supply mechanism allows it to contract or expand based on network activity, particularly since the implementation of a fee-burning upgrade in August 2021. This shift has made Ethereum increasingly deflationary, a characteristic that has drawn attention from investors. The ongoing comparison between Bitcoin and Ethereum raises essential questions about the nature of sound money. While Bitcoin enforces strict scarcity, Ethereum's flexibility could prove advantageous in a rapidly evolving economic landscape. The distinction between these two cryptocurrencies becomes more apparent when viewed alongside traditional fiat currencies. Since 2020, the US dollar and the euro have seen their money supply expand dramatically by 41% and more than twice the rate of Bitcoin and Ethereum, respectively. This stark contrast highlights the inherent limitations of fixed monetary systems and raises concerns about inflation driven by excessive fiat expansion. Historical precedents offer valuable insights into the pitfalls of rigid financial systems. The US dollar was once backed by gold, which, while ensuring stability, also hampered monetary expansion during economic crises. The abandonment of the gold standard in the early 1930s allowed for a more flexible approach to monetary policy, facilitating recovery from the Great Depression. This historical lesson underscores the necessity for a balanced monetary system that can navigate both inflationary pressures and economic downturns. Trump's foray into cryptocurrency investment, particularly with a focus on both Bitcoin and Ethereum, signals a pivotal shift in public perception of digital assets. As prices for these cryptocurrencies surged following the announcement, the debate over which currency holds the title of superior digital asset is reignited. While Bitcoin retains its status as the original digital gold, Ethereum's growing appeal, fueled by its adaptability and deflationary potential, positions it as a formidable contender. Looking ahead, the implications of Trump's strategic crypto reserve could extend far beyond individual investment strategies. As more political figures advocate for cryptocurrency, the potential for regulatory changes and increased mainstream adoption becomes more pronounced. The evolution of these digital assets may very well shape the future of monetary policy and economic stability in ways we are only beginning to understand. The stage is set for an exciting and transformative era in the world of finance, one that intertwines politics, technology, and investment in unprecedented ways. In a bold expansion of its cryptocurrency derivatives offerings, CME Group has announced its plans to launch Solana futures contracts on March 17, pending regulatory approval. This move marks a significant step in the evolution of the crypto derivatives market, which has gained momentum as institutional interest in cryptocurrency continues to rise. CME, already known for its futures contracts on Bitcoin and Ether, aims to cater to the increasing demand for regulated financial products that help manage the inherent volatility of cryptocurrency prices. Giovanni Vicioso, CME's global head of cryptocurrency products, highlighted that the decision to introduce Solana futures is a direct response to client demand for tools that enable effective risk management in a fluctuating market. The contracts will come in two sizes: a micro-sized contract for 25 Solana SOL and a larger contract for 500 SOL. This strategic addition not only diversifies CME's offerings but also reflects the growing prominence of Solana within the blockchain ecosystem, attracting attention from both developers and investors alike. The timing of this announcement coincides with a broader trend within the cryptocurrency landscape as speculative discussions about the possibility of spot Solana exchange-traded funds (ETFs) begin to surface. Several asset management firms, including Franklin Templeton, Bitwise, Grayscale, and 21 Shares, have recently submitted applications to the U.S. Securities and Exchange Commission (SEC) for Solana ETFs. Analysts, including those from J.P. Morgan, are optimistic that the introduction of Solana futures could bolster the chances of SEC approval for these ETFs, projecting that they could attract between $2.7 billion and $5.2 billion in investments shortly after launch. Sui Chung, CEO of Kraken-owned CF Benchmarks, emphasized the potential impact of CME's Solana futures on the regulatory landscape for cryptocurrencies. He explained that the presence of a regulated futures market often serves as a prerequisite for SEC approval of spot ETFs. This regulatory oversight can help mitigate risks associated with market manipulation, thereby fostering a safer environment for investors. In recent days, Solana's token has seen a notable price surge, trading around $175, a 21.3% increase within a 24-hour period. This upward momentum is indicative of the broader bullish sentiment in the crypto market, driven in part by high-profile endorsements and potential regulatory advancements. The excitement surrounding Solana futures on CME is viewed as a pivotal moment for the cryptocurrency, potentially enhancing regulatory oversight and further legitimizing its use in financial markets. This development also comes against the backdrop of a rapidly evolving regulatory environment for cryptocurrencies in the U.S. The cryptocurrency market experienced a dramatic rebound at the start of March, largely propelled by a surprise announcement from former President Donald Trump regarding a U.S. strategic crypto reserve that would include major digital assets like Bitcoin, Ethereum, and Solana. Trump's pivot from a previously skeptical stance to one of endorsement reflects a significant shift in the political landscape surrounding cryptocurrencies, signaling a potential transformation in how digital assets are integrated into the U.S. financial system. As the market anticipates the SEC's decisions on ETF applications and watches closely for further regulatory clarity, CME's foray into Solana futures could set the stage for a new chapter in cryptocurrency investment. With the upcoming White House Crypto Summit and Trump's administration positioning the U.S. as a leader in the crypto space, industry stakeholders are keenly aware that the developments of the coming months could reshape the future of digital finance. Investors and market participants alike are left to wonder how these changes will influence market dynamics and regulatory frameworks in the long run.